Okay, Lancelot, we'll leave it at that. Thanks so much for joining in. Let's cut across to the Lupin management as they address the media.
Have increased slightly, 0.7%, but on year-on-year, 11.5% decline. Likewise, EBITDA line, I think sequentially has declined by 23%, but on year-on-year about 45%, and that has reflected in the net profit, which is sequentially down by 51% and corresponding quarter 65%. But to walk you through the details, I will request Ramesh to share with you the market-wise details. Please, Ramesh.
Thank you, Dr. Sharma. When we actually began this year, we did talk to everybody to say that this year is indeed going to be a very tough year for us. It is going to be a challenging year. So to the extent it should not come really as a big surprise to all of us. Q3 has been particularly muted. There is a decline of about 11%, and year-on-year again, for the whole year there's been a decline of about 11% on the sales front. But the good news about this is that when it comes to America, the decline has kind of stopped, and it grew by about 4%. We looked at $213 million of sales. We serviced 204 last quarter. There have also been good growth in Japan, 6%, Latin America again 6%, and whilst APAC was kind of sluggish, EMEA was also EMEA was kind of sluggish. As Dr. Sharma was saying, the results are were also pretty bad only because of the fact that you had one-times in terms of the forex hit, which is close to about 96 crores for this year. The other issue is the fact that when the tax rates in America, when it went down, you would expect things to be better for us in the long term, but unfortunately this quarter we had the impact of winding down on the deferred tax asset. It cost us about 40 crores in this in this particular quarter. If you were to knock off those two, the results would be normalized, would be in fact much better than what has been reflected in our financials. In terms of EBITDA, EBITDA was about 18.3% for this quarter. If you were to normalize for forex, you would see it is close to about 21%. For the full year, we've been, again, there was 9 months at least, we've been able to maintain about 21%. This quarter, we also closed with, in fact, an R&D spend of about 12.2%, which is in line with what we did in the previous quarters as well. And we are targeting about 12.5% for the full year. That will keep our pipeline flowing. And when you speak about, in fact, the prospects for, in fact, the specialty, and Vinita will certainly talk a lot more about it, we bought into Solasec this year. As for the rest of the details, Vinita would take it forward.
Hi friends, while the current year has been challenging as we had anticipated, we remain committed to evolve our business into complex generics as well as specialty, while continuing to grow the rest of our regions in the emerging markets, whether it's India or other parts of the world. As Ramesh mentioned, we have made progress on the specialty front as well as on the generic front. We have been working hard over the last couple of years to evolve our generic pipeline into complex generics, in particular inhalation products as well as biosimilars, and have made progress on that front, which I'd like Nilesh to talk about a little bit more. On the specialty front, which is a growth driver that we've had aspirations to build over the last couple of years, we have made good progress in this year, with the Mexalotine filing in the EMA in the summer, in June of 2017. It gives us the opportunity of bringing an orphan drug for myotonia, for muscular disorders, to the market. So we are hoping to get approval for the product later this year and enter the big 5 European countries, hopefully the last quarter of this calendar year. Likewise, in Japan, you saw that last year we licensed Bypresso from Astellas, quetiapine XR for bipolar depression. We have launched this product in the last quarter and again start building a hybrid complex generics plus specialty model in Japan. Last quarter, we closed the Symbiomics acquisition that gave us the access to the SoloSec product for the U.S. market. This is a significant opportunity for us in the near term to build our women's health business in the U.S. As you know, we started our women's health business focus with Methergine that we acquired through Gavis. In the last year and a half, we have built up Methergine to an $80+ million product with a very strong focus around key OBGYNs in the hospital segment.
Okay, that's the Lupin management talking. The stock, of course, not trading favorably, 5% down, 6% down now. That's a sharp gash that has come in on Lupin. Actually, a quick trading perspective here.